Hello traders, welcome to option trading. So today we want to look into one of the basic strategy of options, which is a long straddle. I'm just taking September month expiry. We have to look into the current value of Nifty if I'm going with Nifty and Bank Nifty accordingly. So I'm doing with the Nifty. So when you look into the option chain here, so I'm just taking the month expiry of September. So we know that this is what at the money, right? We have three things: in the money, at the money, and out of the money. So a straddle concept, either it is a long or short, we have to take up the at the money. So I'm just taking 17400 call buy. It is a call, one lot, 336. IV 17. It is okay. And then again 17400 put. I'm going to buy. It is at 359.85. And IV is at 17. Fine. IV is okay. Always avoid buying, that is buying calls and puts when IV is high. So because anytime it may reverse and eat your premium. So it is always better you have a, make sure you have a very lower IV if you're going for buying. And we'll discuss about IV implied volatility in a separate video. So I'm just using Opstra software to represent the strategy here. So I've taken 17400 CE, which is trading at 336, and 17400 PE, which is trading at 359. So when you look into the chart, you have the probability of winning is 43%, and you'll have undefined profit, and the and maximum loss of 334800. So on your break even is 16704, right? 16704, this one, and 18096. 18096. Okay, so how it works means, so the market is at 17326, right? So whenever you have a movement, that is this sort of trading is called as directional trade. Okay, we don't want market to stay in the same in the same place. It has to move either direction, either upward or downwards. Okay, so either if the market, okay, if it is at 17329, assume that the market moves for some 300 points. So if it moves some 200 points, you'll be getting approximately some 800 to 900 profit if it moves upward direction, and 300 200 points if it moves downwards, you'll get 900 rupees profit. Okay, so that is what it is. So if it moves, for example, if you are holding this for 2 or 3 days, and if you see, like, if market moves some 500 points in upward direction, so what is going to happen? So you will get a profit of approximately some 5500 something if it moves in upward direction, and if it moves in the downward direction some 500 points, approximately you will get some 5500, same thing. Okay, so the market continues in the same direction, you will be getting a better profit. Okay, it keeps on increasing. That is why they say, like, it has undefined profit. Okay, any direction it may go, it may move. Okay, but you have a drawback here, is that the market should not sustain in the same place. So if it sustains, that is what the break even given here. So if it sustains below this range, right, 16704 and 18096. So if it sustains during the expiry, that is 29th September, so you lost some 34,800, right? But it is not going to be immediate. It will give you some time, and you can't say, like, market will sustain in the same place always. So if you expect the market will move in any of the direction, you can go for this strategy. Okay, so I'll give you a small hint how to trade in this scenario. So you can trade after 315 or almost 320, so that market will stabilize. During the closing of market, you'll have a premium eating. Okay, the premium eating will be higher during the market closure. So it is always better just wait, or you analyze your trade, and you can make this order after 320, so that on the next day, when you have any gap up or gap down, for example, say if you have, just for example, if you have some 300 points gap up, on the next day you'll get some 2200 plus here again, some 2000 something in the downside if you have any gap up or gap down. So it is a trick here. So immediately, if it is more opening in the morning, you're not going to get a huge loss. And if you find it is not moving, and if you find your analysis goes wrong, it's better exit. Okay. So it's a very simple idea that you can use the gap up or gap down. And when you look into before entering into the strategy, you have to check the trend of Nifty. Okay, whichever it is, Nifty or Bank Nifty. So if I say, like, if I have ordered yesterday, right? If I have ordered yesterday at 320, after 320, I've got a huge gap down here, right? So you can use this gap down and you can get a very good profit. Okay, so that's what it is. And even if you find the market will, gap up, right? Today it has made a gap down, so you could have got some profit. And if you find the market will gap up on the next day, you can definitely go for this strategy. And it is better you can go for this strategy on Thursday or Friday, because on Mondays there is possibility for a better gap up, and you will also have a better premium. Okay. And do not try during the expiry, or days before expiry, because there will be a lot of premium eating. Okay. So it is a simple trick here, where you can go for buying after 320, so that the probability of winning will be higher. Okay. So that is what you have to look into the market trend. So if you say, like, some last week and all, it was just consolidating, and your trick is not going to work here. You have to make sure you'll have a gap up or gap down. And again, you can also apply this strategy if you find there is a huge move in the market, right? So if, for example, if today the market just gap down, and after that it was going in upward direction, but still it's like consolidating. Okay, but if you find that market will definitely move upward, right, don't go for these strategies on sideways, because during sideways what will happen, the market will be in the same, it will be within this range, so premium will be eating, both calls and put will start moving downwards. Okay. Again, you can go for, I'll give you an example where a single day where you can go for it. So here is a scenario where market is at 17368, and end of the day it has reached 17547. But we cannot predict how the market will move, so it is better avoid during daytime. So it is always go for this strategy end of the day, that is after 3:20 p.m., and then you can exit in the morning if you want. If you find the it is in your direction after a gap up or gap down, you can continue the you can wait for some time. Or if you feel that it is not going to move in any direction, and it is going to sustain in the same place like in the sideways, do exit the position. Okay, because there is possibility for premium eating. These are some tricks for how to trade the straddle effectively. Okay, but there is a one thing here in straddle is that don't wait for long time if the market is in sideways. Okay, you lose premium and you will be in loss. So in this strategy, you are not going to lose money immediately, because it will give you some time. You'll have to take up necessary action and act accordingly. So if you think that the trade will be in direction, that is the movement of Nifty will be in directional, either upward or downward, we can wait, or else you can exit your position. Okay, it will give you enough time, but you need to watch the market. Okay, so that's it for now. So this is the one of the basic strategies that option traders used to trade with. And you can also use this with a minimum margin, because you're going to buy only two calls here, that is one call and one put. You don't require a huge margin. Okay, only the premium amount is more than enough. Okay, so that's all, that's it for today. Thank you for watching the video.